to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. Good morning. Hope you're feeling better. Lawrence, glad to have you back.
I'm not. Thank you.
But crypto never sleeps, so you're going to pull through it anyway.
Suffer.
All right.
Exactly.
Amazon, and we heard from Amazon. Apparently, they're saying no. We have no plans to accept Bitcoin payments. And Emily, we mentioned this yesterday, but it turns out to be a big nothing burger.
Yeah, this is just such a classic crypto story. It's like there was this one source reporting saying that Amazon was going to accept crypto for payment, and then this may or may not have affected the market, driving the price up, and then it turns out that that story wasn't even true. So I think this is just a very classic example of just like be careful how you interpret crypto prices.
On the flip side, we do hear that Goldman Sachs is filing for an ETF, which is, lends to that institutional adoption story. Bitcoin is still climbing. We're still, asking why. Lawrence, one theory out there is that people may be dumping their Tether for BTC.
Yeah. To step back and think about what is Tether. Tether essentially they're the casino chips of crypto. When you go to a casino, sometimes you'll put dollars down and whatever, but most of the time you're dealing with casino chips. And the fear is that there might be too many casino chips out there for you to be able to redeem, if you think about it that way. That is the big worry about what's going on in the Tether market, if you just simplify it. About half of all Bitcoin and other cryptocurrencies trade on it. It's the largest cryptocurrency being traded by volume. So whatever happens in Tether is a particular concern. So if people are worried that the value of the Tether is not exactly $1 they can't redeem those Tether for dollars, they're going to try to find another way to do it. One way might be to, for instance, buy Bitcoin and hold on to it and maybe find a way to liquidate it for USD, for US dollars down the road if they can get access to it, or some other fiat currency down the road if they need to, because they might not be able to have the ability to cash out in Tether in a way that they would have otherwise. The worry might be, let's say, down the road, you might have exchanges not being able to trade in it. Mm-hmm. Who knows?
We have that Tether chart here. It's still keeping its peg at $1. Yeah. Volumes at 71 billion, market cap at 64.
Yeah, and the market cap has stayed more or less where it's been since mid-May, which happens to be when China stopped allowing the banks and financial institutions from dealing with crypto companies and exchanges and the like. So that was a significant day in crypto, and a significant day in crypto in China. And that happens to be when Tether stopped printing, more or less. It was around that time. So there might be a connection with that.
Let's check in with the crypto markets right now. Checking in on Bitcoin, let's have a live look at the CoinDesk. Bitcoin price XBX index is currently trading at 38,355, still up for a seventh consecutive day, up 0.3% over the past 24 hours. And the CoinDesk Ether price ETX index is at 2310. ETH is slightly down about 1.7% over the day. And the new DFX, CoinDesk's DeFi index, is currently trading at 497. DeFi is slightly down about 4.3% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right, our next guest as the inspiration behind the Wolf of Wall Street. In the 90s, he was convicted of fraud and related crimes for stock market manipulation and running a boiler room as part of a penny stock scam. Now he's an active sales trader and crypto bull. Joining us now is Jordan Belfort. He always be closing. Welcome to the show, Jordan. We're just talking about Tether, and I wonder, do you smell a scam in Tether?
I've been saying that since 2017, that I thought there was a big problem with Tether, and I was shocked that nothing ever came of it because I think back in 2017 there was a thesis that it seemed to be magically creating itself at those times when it was needed most, when people were trying to liquidate Bitcoin. And I was getting it all third hand, so I have no direct evidence, but I'm saying it seemed like a pretty convenient thing that the supply of Tether expanded when it was needed to expand and so forth. And then when I heard they settled something, civilly, and I was like, wow, how'd they get away with that? Like, I mean, that's just sort of not the sort of thing that you would settle civilly. So it's a pretty serious allegation. Listen, I'm a crypto bull. You're right, long term. I think the sooner that massive regulation comes into the market, the better it is for Bitcoin, stable coins, and everything else. I think people are scared of regulation. They shouldn't be. If you look at back in history of any market that was like nascent, whether it was like the junk bond market, everyone said, oh no, the regulators are coming in. The market got much bigger. So I think it's a good thing. And the sooner that happens, things like Tether being printed when it shouldn't be printed will probably become a lot less common, and all the other things you're seeing happening with a lot of the pump and dumps will vanish as well, and that will make, I think, crypto far more viable for the mainstream and the institutions.
So speaking of scams, you say you've been onto Tether for a while. What are some other scams in the crypto world that you think people should be aware of that may not be yet?
There's so many. It's really sad because I really believe that there's some great things out there, right? I mean, really, I'm a believer in Bitcoin, Ethereum, and so forth. And who wins the day? Who knows, right? But you have these, let me just call them what they are, all these shit coins out there, and they're literally every single day there's new ones being printed, and they're simply designed to separate people from their money. They're not legitimate, and they're being hustled, whether it's on Telegram. It used to be hustled a lot on TikTok, and they got shut down, which is a good thing. And they're just, they name a day, name a shitcoin, right? And there's so many of them. And what happens is there's a lot of influencers out there that have been promoting them and making a lot of money. They're pumping and dumping. And I don't think they realize that there's a paper trail for all these. And I have a feeling there's going to be hell to pay for some of these people that went out and did all this because they think that, the SEC doesn't regulate it, but they do. Not if the SEC doesn't regulate, then what will happen is the U.S. attorney will step in at some point. And there's going to be problems. And I think that as soon as that happens, the legitimate crypto is great for it. It's going to soar. And I think that needs to be cleaned out of the market. And, I don't want to name a specific one right this second. I don't want to shoot them out. I don't want to throw darts at someone like that. But there's so many out there. It's ridiculous. MILF coin was one that was going around. It's like ridiculous,
So would you characterize Tether as something that would be, I don't know, a fecal coin?
No, very different. I think Tether, unfortunately, probably in its early days, they probably did some things they probably greatly regret. And they're probably running, I would guess at this point, they're probably running a very clean operation, I would think. But unfortunately, the things that you did when you were just getting started in the early days, they're all on paper. And when they do an investigation, they go all the way back and they use a statute called continued fraud. So there is no statute of limitations. So they can go all the way back as far as they want. And, they can go back to the very beginning, in fact. And if there was Tether that was created when it should have been created, that's a huge problem. I don't think it's a shitcoin Tether. I think it's probably pretty close, but I would doubt that they're still doing the things they did when they were just getting started.
So if, perchance, I mean, this is, of course, they deny, we have to say this, they deny they did anything wrong.
Right.
They've said, they said they've made accidents here and there, but it wasn't intentional. But let's suppose that the Department of Justice finds something wrong and whatever. How do they get out of this?
I don't think they do. I think that I think it's a huge issue. I think that, and again, you don't know. Who really knows? The Department of Justice has a broad latitude of how they deal with these things. But I think it would really give Tether a very serious black eye. And I would be very surprised if it didn't, at some point, maybe cease to exist because there's other solutions besides Tether that don't have that sort of baggage. So
what happens to the market?
I don't know how. What's that?
What happens to the market if that were to happen?
I think the market takes a big hit, but then it comes back. I don't think it's a death blow to the market. I think it just simply is going to be a bad time for a while, whether it's a day, a few days, or a month. But I think ultimately, I think the fundamentals of things like Bitcoin and the value of smart contracts, and I'm a big believer in the DeFi space, by the way, decentralized space. I think the future is bright. There's going to be bumps along the way. I think if you're a short-term investor trying to trade in and out, that's very, very, very difficult to do. I think you need to, my advice, buy and hold. You believe in it, buy what you think has got value for the long term and hold it and be patient with it. I think that's a great strategy, especially with things like Bitcoin and Ethereum. If you believe in it, don't get caught up. Like, I hope Bitcoin goes lower. I hate to say it because I'd like to buy more at a cheaper price. And I don't care if it goes lower.
Speaking of DeFi and where else are you focusing your investments, Jordan?
DeFi. In fact, there's a company I'm an advisor to up in Canada. It's called DeFi. That's actually called DeFi. And I'm not, just recommending anyone to buy it or not buy it, but you can just take a look at it. And but that's like, a platform that allows for the trading of coins, and it's got a great platform for that. And again, that's a long-term play. It's not a short-term. You have to go into this market, I believe, at least for a 2 to 3 year horizon when you're investing in this. And you can't look for the quick in and out. That's one. I love, I'm involved with a company that's private called Monarch Pay, which is a payment processor. So it's a decentralized PayPal for crypto that really uses stable coins. It uses the currencies as well. It's got some great technology. And I really strongly believe in, and I think Bitcoin has got a very bright future. I really do. And you guys know I was a huge bear on Bitcoin for many years, because of sovereign risk. I just thought the government would shut it down. Like I always loved blockchain, but I'm like, how would the U.S. allow this to go on? I couldn't wrap my head around it. Why? I thought they'd act like China's acting now, and they'd all gang up and try to shut it down. That's why I was a bear.
Well, they are. I mean, China is cracking down on cryptocurrencies,
but not the
on mining.
U.S., right? So
the United
China
States
is now, but
they're looking at stable coins right now.
Correct. But I think that it's insinuated itself enough into financial institutions right now that I just my opinion, I don't see the political will in the U.S. to literally shut it down or ban it. I don't really, maybe I'm wrong, by the way, but I don't see that happening. And I think that there's a better chance that Bitcoin becomes a legitimate store of value and serves a purpose, as digital gold. I really think that's a possibility, a very strong one, and that's why I'm long. Bottom line, maybe I'm wrong on that. I think Ethereum, with its flaws it has right now, I think the base of it is brilliant, and the ability to do so many things with smart contracts, and also the NFT space. I think there's so many great use cases for this stuff, and that's why the shit coins bother me so much, because they bastardize the beauty of what blockchain can be.
So what bothers you the most about the Bitcoin maximalists, if anything? And what do you like about them? So what's the good part and what's the bad part of the people who are into it?
Well, I was always hated when people say it's going to 1 million. It's going to 100,000 200,000 next year. One thing I'm sure of is no one knows where Bitcoin is going tomorrow or in a month from now or in 6 months. No one knows. And if they say it, they're lying to you. Okay, you can have a thesis why you believe it's going higher, but what I saw happening, especially in 2017, was as Bitcoin made its first meteoric rise from, dollars up to 7,000 to 20,000, when it got to like the 16,000, 17,000 range, in order to keep the pump going, they had to say it was going to like 200,000 because people aren't going to buy it for incremental returns. People are buying Bitcoin to get massive returns. They want 500%. So you started seeing these wild, outlandish projections about Bitcoin's going to be 2 million. And to me, that was very much designed to get the average person who was looking to get rich quick to put money in Bitcoin. And I saw the same thing happen with Dogecoin, by the way.
Yeah, given what you just said, that it's kind of impossible to make projections, I'm still going to ask you to make one. So, what if you just had to guess, right? Bitcoin, Ether by the end of the year? Do you have a price prediction?
Yeah, I'm probably the last person you want to ask because I lost the bet last year with someone. The CEO.
You want to take a bet this year?
Yeah, hopefully I'll do better this year, right? But last year I lost. The CEO of Monarch Pay, which is a company I have a piece of, right? His name is Robert Beadles, very well respected in the crypto space, and he has the Monarch wallet and the Monarch Pay, which is launching. And I bet him that Bitcoin would be under 10,000 before the end of last year, and I lost $25,000. He was very nice about it, right? So I lost last year. So this year, and he was really instrumental in really changing my mind on Bitcoin because he had a very sober view of it versus it's going to $1 million, it's going to replace the dollar. I don't think those things ever happen. I don't think it's about that. I don't think it should replace the dollar. I don't believe sovereigns will allow that to happen. It's too disruptive. I think it definitely has a great chance of being looked at as digital gold in a very big way. I think it has so many use cases on the smart contracts. I got to pick a price end of the year. I would say for Bitcoin, 45 to 75,000, somewhere in that range, slightly above where it is right now. Maybe it's high, but again, that's just kind of like, it's an educated guess. And I think for Ethereum, which I own a lot of as well, I'm guessing 3,700 to 4,500. That's my guess.
Hey, you're on the record now. One final question, since you mentioned it. What's your take on Dogecoin?
I am not a fan at all. I really dislike it intensely because it was a joke, and wasn't meant to be used as anything legit. It was just a fun thing, and I think that I watched a massive pump and dump happen right before my eyes, inadvertently led by Elon Musk, I'm sure he wasn't pumping and dumping himself, right? He just enjoyed it and I was having fun with it. And I watched all these influencers. Literally, I was called, it was a penny a share of a penny. It was 1 penny. And I started getting the calls, buy this. And the exact words, we're driving it up to $1. That's a pump and dump. We're driving it up to $1. And everybody was part of the Doge army. Okay, and that is just so screwed up because I was in Venice, Italy.
Elon says he pumps, but he doesn't dump, though. So there's that.
Well, it's not quite true, but again, I think he did dump some Bitcoin, but either way, I don't think he's doing it. I don't think he's evil, Elon Musk. I really don't. He doesn't need to pump and dump. I just think he's having fun. Unfortunately, here's a true story. In Venice, about a month and a half ago, I did an event. 30 people around the dinner. I said, anybody own crypto? And 2 or 3 people raised their hand. Some young girl, 20. What do you own? Dogecoin. I did. Why'd you buy it? Because Elon Musk said so. What happened? I lost $23,000 of my life savings. You know, like that.
Did it make you nostalgic for the old days when you saw that, at the very least?
It never makes me nostalgic. That's the one. If I can't listen, I do not look. Listen. Again, it's not something I was proud of to say, but it was 35 years ago. But I think that, again, I want to just say what really bothers me is I believe in the blockchain, and I believe that the legitimate side of this is so powerful and there's so much opportunity that when you have other stuff like this, it bastardizes it. And that's what really bothers me.
Yeah. And just to clarify, Elon did dump about, I believe, or rather Tesla dumped about
110 million worth of Bitcoin.
Yeah, of their holdings
110.
To prove, he says, that there was liquidity in the market for a company that size.
Come on. Everyone knew it was liquidity, but it's the whole thing, whatever. I don't think he's a bad.
I know he's a Jordan.
What's that?
But the last, we got to wrap, but, just for fun, what's the better portrayal, The Wolf of Wall Street or Boiler Room?
The Wolf of Wall Street, 1,000% down. Leo is Leo and Marty's Marty.
Thank you, Jordan. Thank you, Jordan. All right, that was the Wolf of Wall Street, Jordan Belfort. Thanks for joining us. Coming up, checking in on Asia and our regulation and policy update with CoinDesk's Nick Day.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
CoinDesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Welcome back. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, July 27th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Coming up, Huobi applies to deregister its Beijing entity. Facebook in hiring mode for its Novi digital wallet project in the Philippines, and a K-drama is set to take crypto back in time. Let's get you up to speed from Asia to the world. First up, one of the world's biggest crypto exchanges has applied to deregister its Beijing entity. According to China's National Enterprise Credit Information Publicity System, Huobi made the application last week. With crypto trading banned in mainland China, like other exchanges, Huobi conducts its trading business outside of the country. But Beijing Huobi Network Technology, which was registered in 2013, is still active, providing internet information services to discuss developments in blockchain technology. Well, Huobi told Forecast News that the entity was registered in the early stages of the company's development and that as it has not had any business operations, it's unnecessary, and so they've applied for the cancellation. Huobi is not the first crypto exchange to cancel its mainland registration. OKX also applied to deregister one of its mainland company entities, Lewitinn, in June. The move caused a shockwave on the market, with Huobi Technologies' Hong Kong share price plunging 22% in trading today. And onto the markets now. Bitcoin down almost 3% at a little over 37,000 US dollars. That's as of 4 p.m. local Hong Kong time today, following Amazon's denial that accepting payment in Bitcoin could be on the cards. And this follows a broader mixed trading day in Asia as investors remain cautious over tech regulations in China. And in the top 10 for cryptocurrencies, Dogecoin down 9%, while Cardano is down 7.5%. In the Philippines, Facebook's Novi is on a little bit of a hiring spree. Facebook's career page currently shows 5 openings in the country for positions dedicated to Novi, including help operations investigator, onboarding coordinator, and learning business partner, while it only has 1 other opening in the entire APAC region. Novi, which debuted in 2019, is the social media giant's digital wallet, allowing transactions using the blockchain-powered digital currency Diem, formerly known as Libra. It claims to help people access affordable financial services with no hidden charges to add, send, receive, or withdraw money, critical for a country where remittances represent about 10% of its entire economy. Philippines makes a lot of sense for Facebook to roll out Novi. After all, it enjoys almost complete market domination there. Facebook holds 93% of the country's social media market share, and almost 97% of Filipinos used Facebook in the third quarter of last year. And the move could be impactful too. The number of unbanked Filipino adults stood at 51.2 million in 2019. That's 71% of the total adult population, who could potentially be the target of Facebook's new financial venture. And finally, yesterday we told you about Hollywood-backed animated stoner cats getting into crypto. Well, now crypto is set to go back in time in a new K-drama. The Age of Money will be produced by fledgling Korean DeFi digital asset management protocol Black Whale in conjunction with drama producer K-Play Contents. Based in the ancient Joseon dynasty of Korea, the story centers around a king looking to get to the bottom of an invisible brass coin that is causing his country chaos. Black Whale and K-Content say their plan is to create more blockchain-themed educational entertainment to promote better understanding. So we got ancient history and crypto kings. Can't wait to get into this one. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Time for a live look at Bitcoin. The CoinDesk Bitcoin price XPX index currently trading at $38,452. Bitcoin slightly up about 0.3% over the past 24 hours. And the CoinDesk Ether price ETX index at 2307. ETH slightly down about 0.9% over the past 24 hours. And the new DFX CoinDesk's DeFi index is also slightly down about 4%, trading at 501. All right. Lawrence, so we're seeing a bit of a bump for the 7th straight day of Bitcoin. Is this sustainable? And what? There are a lot of theories out there about what created this bounce in the first place, whether it be a short squeeze. Now we know the debunked Amazon rumor, the Elon effect. What say you? What could this be all about?
It's a soft. Well, I mean, we're coming off a soft landing. We'll get a lot of these, but we have to remember where Bitcoin was a few months ago and where it is now. It's a far cry. I mean, we're looking at a 30 handle. We were looking at a 60 handle just a couple of months ago. So we could get all excited, and people could get all excited. Oh, we're getting close to 40. Hooray! But I mean, look at that. That's Everest that we're not going to be climbing anytime soon. I disagree with Jordan. He was calling out numbers, 40 to 75,000. I should have taken
very high
the other
numbers.
side of that
Yes.
bet. Yeah, and look, anything can happen in 6 months. You could have a crisis where people flock to Bitcoin for safety, if you could believe that, compared to other cryptocurrencies that won't be named right now. But the market in general is not where it was before. And we have to pay close attention to what's happened in China. We have to pay close attention to the idea that the liquidity, the source of demand, is not where it was 2 or 3 months ago. And there might be institutional interest still, but the retail interest is not what it was. And if you look at the volume numbers, it's really low compared to where we were, and that tells us a lot.
And Emily, from the macro perspective, things from China appear to be, dying down in terms of the fear, uncertainty, doubt there. Anything from a macro side that...
The media cycle has passed, but the situation hasn't really changed. China is definitely still very strict, but I think what we've shown is that, China doesn't dominate the Bitcoin cycle the way that it might have in the past. So I guess that's sort of like the bullish message here, is that China has been cracking down. This crackdown has been pretty serious, but it doesn't seem like it's going to have some sort of permanent impact on Bitcoin pricing. You have, miners fleeing China, but they're just going to other parts of the world.
Mm-hmm. And we continue to monitor developments out of Tether. Tether executives, of course, are reportedly facing a Department of Justice criminal probe into possible bank fraud conducted years ago, according to a Bloomberg report. Although the price of Bitcoin dipped on the news Monday, falling about $1,000 shortly after the report came out, it's unclear whether the Tether news will impact the market significantly from here on out. And joining us now to discuss is Francis Coppola, CoinDesk columnist, writer, and author of The Case for People's Quantitative Easing. Welcome to the show, Francis. So first off, I'd like to hear your take on the reasoning behind Bitcoin's bounce these past 2 days in particular.
Well, there are a number of possible reasons for Bitcoin's bounce. There was the Tether news, as you mentioned. There seems to be persistent news about Tether, and sometimes Bitcoin responds to it and sometimes it doesn't. So I'm not sure how true that is. There was also a bit of a short squeeze going on. And there was the news, or not news, that Amazon was possibly going to accept Bitcoin, which turned out to be Amazon issuing a job advert for a blockchain digital currency lead within their own development team. I'm not quite sure how people got from one to the other, but it did cause a bit of a stir.
Francis, what do you make of this Tether news within the greater narrative of the crypto market's stability, and how regulators are increasingly sounding the alarm on the transparency of stablecoins?
It's not really clear whether this particular action is related to the noises we're hearing from regulators about the need to regulate stablecoins and the systemic risks that they pose. The Department of Justice has been pursuing a probe against Tether for some time. But that was on market manipulation. And what we don't know is whether they are still going on with their probe into market manipulation, the continual rumors that Tether manipulates the price of Bitcoin, whether they've now moved on into investigating historical fraud. Personally, I think that the two are not necessarily connected. That I think the historical fraud is more likely related to the recent action by the New York Attorney General.
Francis, I wanted to ask you kind of a larger question because you tend to be good at explaining things. So, in the crypto world, everyone loves to talk about Tether all the time. But, outside of the crypto world, I think people don't really understand what the fuss is about, right? So I was wondering if you could sort of break down for us, why should people care if Tether turns out to be a fraud, right? I mean, people keep talking about these systemic risk and bank runs and how it will impact the financial market, but I haven't really heard anybody spell out exactly how that would play out. So I'm just curious if you could maybe game out for us, what is the worst that can happen here? And why should people care if Tether is actually backed or not?
Well, I'm a little puzzled by this because the assumption with Tether is that it must be backed because people might want to dump all their Tethers and exchange them all for dollars. But I don't think that's really how crypto markets work. So as long as Tether is being used really for liquidity on exchanges and as collateral in DeFi, I'm not convinced that the fact that it hasn't got 100% full reserve backing, that it's got a lot of corporate debt and stuff backing it, is that important. Because what matters is really how much of it people want to redeem for dollars. So the reason why regulators are getting worried about this is that they're looking back to occasions like 2008 when reserve primary broke the buck and there was a mad panic in the repo markets. And thinking, oh my goodness, that could happen again with cryptocurrencies. And because we've got some large institutional players coming in now, we've potentially got banks involved, although they're beginning to clamp down on that and so forth. There is a possibility that a run on Tether, a mad rush for the exit where everybody tried to exchange all their Tethers for dollars and Tether couldn't raise the money, could have knock-on effects into the traditional financial system. And that's what they're worrying about. And the other side of this is that Tether recently revealed that something like 60% of its reserves were in commercial paper. And we don't know exactly what that commercial paper is. But we know that in the past, the Fed has bailed out the corporate paper markets when it's got into difficulties. So again, my guess would be that they're looking at the possibility of a run on Tether and thinking, oh my goodness, we might have to bail out the corporate paper market because of Tether. And I would think that that's what this is all about, really.
Francis, but in that interview with CNBC, I think you caught it, the interview that the CTO and general counsel had. They indicated that some of that commercial paper, or at least maybe even all of it, but definitely some of it, was what they said was international. So it wasn't just U.S. Is another worry that they issue Tether against commercial paper, no matter where it is, and effectively increased the dollar supply, if you will, and are propping up commercial paper markets, bond markets, and debt markets in a way just by creating effectively dollars and doing something where it's essentially just at risk in that regard. So maybe not a run on Tether, but what it means for the capital markets in, say, China and say other countries that where they might be holding it. Granted, it's just 60 billion now, but what's to stop it from being 600 billion if that's the case? Is that a real worry?
Yes, it is a worry, and it's really why I mentioned the 2008 situation and the run on reserve primary, because we're talking about offshore dollars here, dollars that are created outside the US banking system that don't have a guarantee from the Fed and have no FDIC support or backing. But in the event of a crisis, there could be immense pressure on the Fed to bail these things out. And in this case, we have no idea what this commercial paper is. We're pretty sure, as far as I can tell from talking to people in the dollar corporate paper markets, that it's not dollar corporate paper. It's coming from somewhere else. So it is what we call shadow banking, where they're creating dollars outside the regulated banking system, and what's known as euro dollars. And we've seen that fail quite badly in the past. So again, that's really what regulators are worrying about, I think.
Yeah, in that same interview, they referred to the issuers of that commercial paper as partners. Was that significant? What does it say about? Is it potentially Do you think it's the exchanges they deal with? Is it something else? What do you suppose they mean by the term partners when they talk about the issuers of that commercial paper? Is that out of the norm?
I don't think we know exactly who they mean, but I think what we can be clear on what they don't mean is ordinary holders of tethers. They are talking about big exchanges, big companies, big institutions of some kind with whom they have close relationships. And because Tether's really pretty opaque in many ways, we don't know who their partners are. There has been some suggestion it could be big Chinese property companies. We don't know. And in a way, it's the not knowing that's the problem. So we have no way of judging how big their risk is because we don't know who their partners are, and they've steadfastly refused even to reveal the nature of their partners. They've said we can't tell you who they are because that would be breaching commercial confidentiality. And if they actually had to name individual companies, then yeah, it would be. But actually refusing even to reveal the nature of these companies, and that is odd because even money market funds have to reveal the nature of the commercial paper that they are taking on board. Tether at the moment is refusing to do that. And for me, that's a bit of a red flag. I don't see why they can't reveal it.
A lot of questions, very few answers. Frances, we got to wrap it there, but thank you for joining us this morning.
Pleasure.
That was CoinDesk columnist, author, and economist Frances Coppola. Coming up, checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day. All right, welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. So what do we, this has become a lot of a show about Tether. So what do we do? What do we know and not know about the Tether investigation that is going on right now in the United States?
Yeah, so yesterday the Bloomberg report said that several executives or, employees of the company have received target letters from the DOJ, basically saying, these individuals are under investigation and might be the target of charges filed by the U.S. Justice Department. And Tether, in response, said that the Bloomberg report was repackaging old claims. That's a quote. And, basically, saying everything but denying the actual claims in the article. A lot of it was just saying, this is not new. This is old news. But at no point did they actually say, these allegations are false. And I did ask a spokesperson about that and did not receive a response.
So, Nick, we don't have any confirmation that the DOJ is in fact investigating at all, right?
Right. There's been no independent, confirmation yet. We do, we've seen reports that the DOJ has been looking into Tether for a couple of years now, since at least 2018. And, the allegations seem to have shifted. 3 years ago, the claims were about market manipulation. Now it's about bank fraud. So, yeah, there's definitely a lot left to answer about, A, whether this investigation is, active and ongoing, B, are charges actually coming, and then C, what exactly would these charges even be about?
Are they picking up where Tish James left off in her investigation of Tether and the settlement that happened in New York State a few months ago?
So it would not surprise me if the DOJ was looking at the discovery that the New York Attorney General's office had during that investigation. But what we know so far, or what we've heard so far, seems to suggest that they're different tacks, right? The NYAG was focused on consumer protection, and amid claims that Tether, Bitfinex, Tether's sister company, lost access to nearly $1 billion, and Tether's funds and reserves were used to help patch that hole. Whereas here we're seeing these are different claims. They're more about bank fraud, and presumably they're kind of focused on issues like why did Wells Fargo cut off Bitfinex and Tether? What's the deal with crypto capital? So they seem to be kind of focused on different areas, but it wouldn't surprise me if there was some overlap, at least in the data gathering and investigative stage.
Yes.
All right, Nick, we got to wrap it there, but thanks for joining us.
Thank you.
I was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Time now to check in with Crypto Twitter for our tweet of the day. You know, Cuba is under a health crisis and ongoing U.S. economic embargo. The situation is getting pretty dire out there as the government cracks down on protesters. Jonas025, a Bitcoiner from Mexico, tweeting, "We will empower Cuba. Let us send Bitcoin to the Cubans. This would exclude any attempt at political correction or foreign interventionism, dollar anything." Folks around the world are seeking to help those in Cuba. All right, that's it for First Mover. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. for All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.